We are back on Morning Line. Thanks for joining us. Dr. Friday's with us. She's our tax expert.
That's me.
Taking your phone calls. That's her. The lines are open, 737-7587 if you want to jump in. And Joe waited through the break, so let's go to Joe.
Thanks, Joe.
Good morning, Joe.
Good morning, Nick.
Hey.
Got a quick question or two for Dr. Friday.
All right.
I listened to her explain the IRA. The question I've got is on a Roth IRA. Is it still like 5 years, and then you have to start paying taxes on it? And also, I've got some Series E
bonds,
savings bond. Is it still 30 years, and they quit paying interest on it after 30 years?
So the first answer for the second question, because it's easier. Series E, yes, to my understanding, it's still 30 years and there's no more interest. You do want to cash those out at some point, reinvest the money. Otherwise, it's just kind of sitting there. It's just sitting there, not really doing anything. The first one is, okay, so a Roth IRA, we put into that one with after-tax dollars, completely different than the standard. So the IRS does not have any money in our pool.
Right.
So that's a great thing, because now it's growing tax deferred and we can take it out tax-free. That's a wonderful trick.
They don't tax you on the money you've earned by the growth.
That's perfect.
That's the big thing. Roth is a neat thing to have.
That is what we love. So you really kind of want both.
Yes.
You know, in the perfect world, you put a little over here and a little over here so you can draw from both. His question was the 5 years. So the misconception is any money you've ever put into a Roth, your own personal investment, you can take out anytime you want.
No matter how old you are.
No matter how old.
I didn't even know that.
So then it's the growth. It's 5 years or 59 and a half, whichever is later. So if you started contributing at 58, obviously the 5 years is going to work for you. If you start contributing into it when you're in your 40s, 59 and a half will be the contributor. So whichever it is, this is only the growth that we're talking about. Otherwise, there is a penalty for taking it out early.
So the 5 years would be what?
So it's either 5 years if you're over 59 and a half, whichever is later. So basically, it's 59 and a half or longer, depending on when you started contributing to it.
Okay, so for someone like me, when I started contributing to Roth a decade ago, it's going to be 59 and a half that I can start drawing on whatever the total lump sum growth is.
The growth
but if you talk to or look at your account and you see, well, over the years I've put 20,000 in, it's grown to 35,000 now. You can have access to that 20.
Anytime you wanted to.
35,000.
Correct.
Until you're 59 and a half.
Until you're 59 and a half or the 5 years. That's where that little tricky part, because some people may not start their retirements until they're in their late 50s on a Roth or something, because they've had a 401k through the company or whatever. So just keep in mind, and that's a great question. Your financial person should be able to answer exactly how much you've had in growth that's prior and all that to give you, so you don't trigger paying taxes.
And that's what I was going to say too. I know you're not a financial consultant that way, but there are reasons, tax reasons, why a lot of people may say, well, look, I've got my 401k at work and they've got a standard 401k and a Roth. Which should I do? There are good reasons to do them both, are there not?
Well,
tax-wise.
I'm going to talk from the tax standpoint. Tax standpoint is if you're in the 12%, so a married couple making less than 100 grand or a single person making 50, in my opinion, if you're under those dollar amounts, you should always be looking at a Roth. Saving 12% now isn't worth it, because we're going to be going back up to the minimum tax levels of 15 by 2025. So you're already saving money. If you're over those, you go immediately from 12 to 22%. Now you're talking about saving on 22%. When you hit retirement, you may be as low as 15. So this is when you really want to talk to your financial planner. So if you're making a single person making 100,000 or a married couple making 200,000, I'm thinking you might want to look at a standard IRA. Again, I'm looking from the tax standpoint, because now I'm going to save 22%. That's a lot of money if I can put away immediately. If I'm under that, the 50 and the 100, I would be consulting with my client saying, hey, I mean, sure, you can put it in a regular one, but you're only going to save 12%. It's not enough. I would put it into a Roth, let it grow tax-free, and then pay the taxes today and let it ride.
Okay, that makes sense. And then also having both of those funds, we talked about this earlier, when you decide to start drawing, depending on what your income's coming in, if you draw on a Roth as opposed to a 401k, there's no taxes on that. So that's not counted. You could be right on the edge with what your income is And if you take out of the 401k, it could bump you up to a higher income range. You
Right.
say, well, you know what? I'm not going to take from my 401k right now. I'm making too much. I'll take from the Roth, and it keeps me under that tax rate.
Right, and that's what you want to do. And that's people that are working with a job with a 401k that you can contribute. That's when you want to, in October, November, you want to be looking at that number, because if $1,000 or $2,000 could be, I can throw that into my 401k and be under the $100,000 mark versus being over and having to pay 22% tax on that money, throw it into the 401k, maybe the smartest thing you can do. So maximizing or knowing your numbers throughout the year could save you hundreds, if not thousands, over a lifetime.
All right, let's go to Richard. Richard, good morning. Hi, Richard.
Good morning.
How can we help you, sir?
Miss Friday, on required minimum distributions, if you wait until you're required to take that distribution, is it possible to have that money sent directly to a charity and you not ever have to claim it as income and it just cancels itself out?
You are a very intelligent man, and yes, it is one of my favorite tax deductions for people that are taking required minimum distributions. Didn't get into it, but this is a perfect time. Qualified charitable distribution is plain and simple. Whatever, let's say that your required minimum distribution is $5,000 a year. You must always give that much, let's say, to your church in tithing, or you can do it to multiple charities. You contact your custodian, they write the check. A lot of times they'll send it to my clients, and then they hand those checks to their charities. But then at the end of the year, what's awesome is on that 1099-R, you have the taxable amount as zero because it's under charity, and you don't itemize, guys. You don't have to put it under a regular charitable contribution like we would if we're under the age of 65. It would be 100% tax deductible. Awesome plan. Love it. So yes.
Does that make sense to you, Richard? Yeah.
I'm not quite finished yet.
Okay.
Can I ask something?
Sure, go ahead.
Is that only applicable when you're required to take that distribution? In my case, I'm 69 years old. At that age, can you also do the same thing even though you're not being required to make the withdrawal?
No, sir, and they just changed the withdrawal to 72 for people like yourself, and my understanding is that's going to be moving the QDC too.
So the only time that you can, make that transaction is once the government requires you take your required minimum distribution.
That's 100% correct. Yes, sir.
Well, thank you very much. I appreciate y'all's show. Thank you. Have a good day.
Thanks you for your call, sir. Appreciate it.
That's a good question. Really good question. It's a great tax deduction, and that's going to hurt. Well, not hurt, but it just pushes it out a little further for people that may have been taking draws and thinking, hey, at 70 and a half, I'm going to be able to take advantage of this. And now that window, like this gentleman who may be taking distributions, was thinking, hey, another year and a half, I can start doing it through charity. Now he's going to have to wait till 72, which is another year and a half that he'll have to push it.
Let's go to Lavina. Hi, Lavina.
Do we scare her? Lavina?
Lavina, are you there?
Yes, I'm here.
Hi there. How can we help you, ma'am?
How much can I deduct for charitable contributions?
Are you over the age, are you on required minimum distributions, or are you under the age of 70 and a half?
No, I'm over 70 and a half.
Okay. Are you taking required minimum distributions from an IRA? Or are you just receiving pension and Social Security or something?
I have a IRA that I get it. They have to send me a check, and I count that as income. I know that, but I'm just wanting to know what percentage of my total income I can count.
Okay, so
give to charity.
Right. So you can give 60% of your income to charity, but it may not all itemize, because if you're over the age of 65, you would have to have more than that, if you're single, more than almost $14,000 before you itemize. A reason I was asking about that required minimum distribution, you can give 100% of that money directly to a charity, and that would be 100% tax deduction, not required to itemize at all.
I see. Would I need to have the bank just send the check to the charity, or because they send the check to me, of course?
Right.
But would it be that I would have them just to send it directly to the charity?
That's 100% correct. Yes, you would contact them, give them the name of the charity. They would go to the IRS.gov, confirm the charity is a legitimate 501c3, and then they would either mail it directly to them or provide you the check to send or hand over to the charity. But it would be made out to the name of the charity.
Okay, well, and you said otherwise I can count 60% of my income, give 60% of my income to charity.
Yes, ma'am.
All right, thank you so much.
Thanks.
Bye.
I have to say, we have probably the most giving population wherever. I've only lived in California and here pretty much doing taxes, but I can't tell you how many people in Tennessee are always maximizing charitable contributions.
Which is awesome. This is the volunteer state. And that woman,
true.
how sweet was she? And that's awesome. And you give and you get.
Well, and
that's what it comes down to.
it is that whole core belief that exactly what you said. You know, I'm blessed, so I'm going to help others. They share in what they have to help other people. So it's just awesome to be a part of.
Nice to hear. All right, listen, we'll take a break on that note. When we come back, our final segment as the calls continue to come in. Daryl's up next and more. The lines are open if you want to jump in. We've got some more time with Doc Friday right after this.